following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone, on this 14th day of October. Welcome, and wow, what markets we've had lately, especially that last half hour push down to the lows at 1863.75 in the E-minis yesterday. That was amazing. Just went right through support. Now, thank you to John and Steve for 3 great hours. I hope to give you another one right here up until 12 o'clock. And then, of course, what's today? Today's Tuesday. Then you have the options. Now you've got programming right through. Fabulous program. Now, this is going to be very, very important. There should be a counter trend bounce right now. So for my subscribers to my opening call, what we've done is we've taken really nice profits in some areas. We've kept some of the key and core short positions. At the same time, I've got in that we're trying to play the upside bounce, and if that works, we have a way of doing it, and the way of doing it basically says that if there is any upside movement, this particular index should work very well for us. And we'll see what happens. That's all you can do in this business. And hopefully it'll do what we think it's going to do for the next couple of days. And then that's going to be very important. At a certain level, I want to reinstitute some of those shorts. I'm going to be putting it in as a good till canceled type situation with those prices. And the reason being, the weight of evidence still suggests that we've got to be here. Let me just show you something. Here is, on the shorter term, you've got the E-mini, which went to 1863.75 at that was at the 5:15 yesterday. And then, was that yesterday? I'm sorry. Let me just double check. That must have been yesterday. Sure. So that was at. On the 11th. Today is the 14th. So what happened to the 13th? The 11th? Yesterday was the 13th. Whoa. Oh, that's a monthly. And that's a 120-minute chart. So wait a minute. What's going on here? So it starts off with the 11th on Sunday night. Right, of course. Sunday night goes to 1863.75. Bounces, comes back, retests at 1864.75. This is the S&P E-mini, the December contract. And then what happens? It's spikes, pulls back, and now is making leg B, possibly peak B, in the 120-minute chart, trading at 1881, up 16, which sounds huge, but yesterday was down 30-something. So now this is going to be very important. Why? We've made a higher low bar so far. The stochastic has gone to a little V-shaped bottom. Day is young, not even 2 hours into the trading day. The on-balance volume, and this is what I like to wait for. I like to have coincident time frames. So we've got a coincident turnaround, and the rule of thumb in the Chapman wave methodology, if you know my arch formation from my CD introducing the Chapman wave methodology, is that if you take out in a big arch formation, if you take out a left side, right side price time match in a shorter time period, number one, and number two is if that bar that takes it out, either that bar or the very next bar comes right back and closes above the left side low bar of importance. That's on the 8th of August at 1882.75. It's trading right now at 1883. As I'm speaking, it's gone above there. If it can close on the day above that, it says, great. Now you can go, you can rally to the next most important it doesn't matter what it is. It could be a gap. It could be a particular candle. In my case, I'm looking at the 1916 level of the 9-period exponential moving average to the 1918 low, 1918.25 low of just a week or so ago. That's a potential area for an arch formation. So first of all, you're going to get the cup formation. within that, there's a chance that you're going to get the arch formation. It doesn't have to go all the way up there, but I'm saying that that is, and since I'm going to be away for a couple of days, I mean, at least for a week or so, that's the area that I'm expecting. So for my subscribers, I'm not sure about tomorrow. I'll do my very best for tomorrow. We've already got our positions. I don't know if we have to overdo it, but if I can, I'll get a quick an update out, or maybe just the changes that we have or what we're watching. I'll try to get it out if I'm able to for Wednesday before the 8:30. I also want to tell my subscribers right now, because of the 15-hour time difference where I am, I will do my very best to try to post after midnight, usually about 1 or 2 in the morning, that it actually posts the next day, the way I have it for my opening call trading, for my opening call service, daily newsletter. But please refresh every day after the bell. And if it says the next day's date, just check it out, because I've obviously updated. The market closes here at 4. There it's at 7 in the morning the next day. So if I can get it done early and then have my day free, that's great. It is supposed to be a vacation, even though as always, I try my very best to get a newsletter out every single day. I might miss a day or two, who knows. But at this particular point, we've had some fabulous gains, and we want to try to protect those gains as well as try to set up for the next reversal to the downside. Why? Because I believe strongly that the weekly charts are suggesting that they have sell modes in place, and all that we can expect here is a bounce. And in the E-mini, we'll look to see the 1912 to 1915 area. That's 200 points, 300 points in the Dow from here. It's a lot of points. I'm not sure if we're going to make it up there, because the MACD and stochastic and the weekly chart are still very poor. But the 120-minute chart is suggesting, yep, you should get to, at least in this bounce, you should at least attempt to get to the 1890s, maybe touch 2000. That's wow, that'd be a minimum expectation. So now let's run the numbers. The Dow's up 94 at 60,417. Sounds fantastic, but yesterday, of course, we were down double that. The S&P is at 1888, up 14. This is the cash. The comp index, this is going to be very interesting. Let me quickly show you the S&P SPX.X. And one of the reasons we are still staying short right from almost at the highs is that I think this is going to be a retracement, and that retracement in the cash index says that 1900 is going to be really 1900 to 1905 is going to be very important. If it's able to, if the S&P is able to cross that and close above it on any particular day, we could have a couple of bounces in an arch or a rectangle formation, maybe even going to 1923. That's the 9-period exponential moving average. We'll just go one step. I can just tell you this: if at any point the volatility index, which is still holding really well, even though it's at 22.38, is still above the 21s that was the previous highs on the weekly chart, having gone up into the 25s. Now I think what we've got to see is, how does it hold? Now, a couple of things. The S&P weekly chart looks horrible. Sell mode is in place, and I'm not expecting anything other than an arch formation. And then we'll see if we're coming back down to test the lows, and the monthly chart is still very poor. And now let's go to the QQQ series. The QQQ series, I'm going to do this because that's really important. I get a lot done today, so I'm not sure how I'm going to be able to do live shows after this because of the crazy time difference. I'll do my best if I can, but so far I'm going to say, hey, I don't know if I can do it. So the QQQ series made a low today. Is that not crazy? It went down to 92.73. I'm going to type that in, 92.73. That should be the low for at least 3 to 5 sessions. It should be. And there should be a bounce. Look, there's the left side, right side price time match, which is two weeks early in the weekly chart. But the MACD and stochastic are horrible. The monthly chart, I'll get to that in a moment. The daily 120-minute chart says, hey, this is really the opportunity for the Qs to rally, and they should rally at least from 93.83 to 94.48, and perhaps even 95.70, maybe even 96 over the coming 3 to 5 sessions. Now let's quickly go to, we don't have to be quick, we're going to go to gold GCZ 14, just struggling. Oh man, gold is just working so hard. It has rallied quite nicely from 1803.30, this is the gold contract, December, to today's high of 1238.60. and 12. Remember, 1238 is the 9-period moving average resistance in the weekly chart, and it has gone to a leg D, possibly a peak D in the 120-minute chart. So let's look at the mighty dollar. I'm calling it the mighty dollar now. The mighty dollar has had a nice bounce. I think the dollar is going to continue consolidating, and I wouldn't be surprised if gold. Let's see what some of the gold stocks are doing. GG. It's trying to move. ASA, one of my favorites. ASA, nice, leg B, but weekly chart looks terrible. Monthly chart looks terrible, but a pretty decent candle on the day. Yeah, I'm going to suggest that there is a bounce coming, continuing in gold as the dollar consolidates. Now, let's go on. We want to look at high-grade copper quickly. HG. HG is, nice move off the bottom, leg B in the continuous contract. Is this leg B or C? 43.5, 43.5. Yeah, this is leg B. And in the HGZ December contract, if I can get there, HGZ December contract, I'll say it again. What is happening? The December contract is the HGZ is trading at leg, also. So that is leg B. Nice move, very nice move. And as such, I must say that a high-grade copper can go from under the $3 level where it's been the last couple of days, the last week or so, to a bounce at 3.10. 3.11. I don't know if it's going to get to the 200-period moving average. We'll go one step at a time. Right now, it's trading nicely. It's acting well. 120-minute chart is acting well. TLT. We want to go to the TLT. Why? Because that, what is going on here? There it is. TLT. The TLT is in a very powerful leg C in the daily, leg C in the weekly, leg C in the monthly, and leg in the 120-minute chart. I'm going to call this EFG, maybe a leg C in the 120-minute chart. I've never seen that, 4 Cs. I'm sure it's happened, but I've never really made a big deal about it before. So bonds are acting extremely well. USZ 14. Isn't that interesting that they're moving together? USZ 14. Yeah, leg C in the December contract as well. Nice. Okay, so now what we want to do is, fine, we looked at the dollar, we looked at gold, we've done everything. And now I want to look at the New York Stock Exchange, NYA.X. There it is. Oh, what a pathetic move so far. But it should rally. It should rally back, and it should test the left side low bar of importance, which isn't, no, it isn't. It goes all the way back. This is unbelievable. It goes all the way back to, wrong way. That goes back to last year? No, it goes back, there it is. So it goes back to the 11th of April of this year, where the low was 10,271. Yesterday, we took that out decisively. Today, it's the candle that says, I'm going to try to get back there, and it's going to be very important that I get back there really quickly, and I try for the 10,423 9-period moving average. Well, we've covered a bunch of things. We can do some stocks when we get back. Basil Chapman, Tiger Technicians Hour, and the Dow Jones 1. S&P's up 18 and beyond.
See, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman, Tiger Technicians, and we're looking at Dow's up 109, S&P up 16. This is going to be very interesting because the comp index is up 49 at 42.82. Let's just quickly see a couple of stocks. NFLX, Netflix, bouncing up 7 at 446. The pattern itself in the weekly says it's going to try to make the 420 area key support, and it could bounce all the way to 463. It's going to be very important over the next week where it goes. Let's look at our favorite there, Apple. Everybody's favorite. Apple is trading at AP. Okay. Apple is up a whole 41 cents at 100.22. Charge, this is really tough. It's in this area, what I call the inside track buy zone. And I can just tell you this, that if Apple closes in the next three to 4 days, under 98, well, I'd say between 90, under 98, yeah, under 98. Yep, under 98, there's a real good chance that the weekly chart will start to roll over and it'll very quickly go to the 95, 93 area. So that means you've got to look at it as a symmetric triangle, and you've got to put the same emphasis on the upside. And you're going to say that if at any point in the next week or so, Apple trades, doesn't even have to close, just has to trade over 101.90, let's call it 102, And that'll say, hey, it's going to test the 103.74 last high, and then we'll have to see what happens from there, because it could be a cup from double top formation. So in the meantime, back at the ranch, what we're looking at is, if you look at Google, why is it not doing that? Okay, Google, G-O-G. There are. Google hasn't yet made up yesterday's loss. Unbelievable. It was up 10 at 543. It's the same kind of pattern, high-level consolidation, making an arch formation probably in the monthly chart. So now let me just give you my analysis. And this is what I'm looking at for the next, I'd say, into a week from this Friday. This is what I'm anticipating. Two things. One is, whoops, let me just get that out of the way. The IWM, which has been one of the weakest of all the indices, is having a really nice, it's up 1.99, up to 1.94%, way more than the double, more than double, in fact, the Dow and the S&P. And my suspicion is that the stocks and the sectors and the indices that have been the absolute weakest are going to have some kind of a bounce. In percentage terms, it could be better than many of the others. The stocks and indices that have been the very best up until now are going to become the weakest over a period of a few weeks. That's just the way I'm looking at it. And what I'm calling it is, on the way down, it is a rotational support, whereas the rotational correction on the way up said that there will be high-level consolidations with very limited downside in time and price. There's a chance that we're now looking at the exact opposite, that on the way down to lower lows and lower highs, rallies will falter fairly quickly and be fairly limited. Gee, I hope I'm making myself clear, because if I am, you'll know that at this particular point, I have no choice but to consider that the selling is not done yet, and that because there are some sectors that are only now beginning to turn down, it says to me that in the spectrum of things, you can get I had a question, an email, and this fits in exactly. If you go to the XLF is the financials, the select S&P financials, you will see that there's been an arch formation, but it has not taken out, it has just yesterday taken out one key left side support level at 2245. But the main 2208 has not been touched, and 2227 is the 200-period exponential moving average support in the daily chart. The weekly chart, though, has, like the daily, has gone from a sell signal to a sell mode, and there are a couple of reasons for it. And one of the reasons is that last week it closed way below the 9-period exponential moving average. Last week the MACD had just crossed negative, and the stochastic was pulling back under 80%. And that gave me a reason to say that it was that double, that M-shaped pattern with the right shoulder failure pattern in the stochastic, in the weekly chart, and that's exactly what we've got. And therefore it's a peak F in the weekly, but a peak G/C in the monthly, which fits exactly the spectrum, the criteria that I want it to meet for a peak G. I'll be right back. Basil Chapman, Dow's 98, S&P's at 15. We'll talk about XLF and some stocks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. We're busy talking about the XLF. So the XL, I want to give all the parameters that I'm looking at here for going into this coming Friday. On a weekly basis, the XLF has a long-legged doji candle at this particular point, so we can't even talk about it in terms of as if it closes. Not even 2 hours into the second trading day of the week. So let's do this. The resistance that was hit just 3 days ago, and the resistance that I'm looking at will be in the 2270s to the 2290s for the XLF, the S&P Select Financial Spider Fund. The support is at 2227. A break of that support, certainly on a weekly basis, but even intraday, says, oh, man, there's nothing now until you get to the 2208 area. So you really want to see what's going on here in terms of the XLF. It needs to be leading, and it's not. It's only up 17 cents. I would think that on a day like this, with the JP Morgan, I think it was, and Wells Fargo maybe, giving very nice numbers, other things should be happening. Look at JP Morgan, JPM. JP Morgan right now has a gap down candle. Oh, I guess they weren't such great numbers. A gap down candle having made a peak F top in the daily at 61.45 on the 19th. Most of the indices hit the 19th as highs, and then it goes on the weekly basis. Is already at a peak D from the 61.85 level and a peak G, unusual peak G in the monthly chart. Which corresponds to the G in the XLF. Let me just double check if I haven't moved. Yep, XLF. So this is going to be very interesting because JP Morgan on a monthly basis is in fact holding the 9-period moving average right as we speak, and 58.98 is the 9-period moving average in the weekly chart. Extremely strong resistance, and 58.96. There's an overlap here that is really important. This is it's like confluence in a it's like confluence in a sense, and it makes it a target area between 58.96 and 59.28. If there is a rally by Thursday or Friday that actually has the XLF, has JP Morgan moving into the it's 57.61 right now, down 55 cents. If it can even get into the 58.40, says, hey, we've got a target there on the upside to make that H pattern. A break below today's low is really bad. Let's look at the question was JP Morgan done that. Goldman Sachs, used to be one of the most important stocks on the market, let alone bank stocks. They've had a little problem for a while. Peak F top at 189.50 on the 6th of October, 189.50. Gaps down the next day, trading with a low today of 177.88, and this is only a leg A down. And the MACD is poor, and the stochastics trying to rally. And so far, this is a lousy candle. It's up 1, but that's only up 0.59%. I'd actually like to see that in both the daily and the weekly. Monthly is in leg F. Weekly is in probable peak E if it doesn't take out 189.50 this week. But I would like to see a bounce. I'd like to see a bounce because I don't want to see the markets go crashing down. It's unpleasant. Not only that, I'd like room on the upside to look at some of the stocks that we haven't shorted that I've been wanting to short, and they look really good, or to add to the short positions. Going along, we've gone along only one particular instrument, and it's a particular instrument that's working really well at this particular point. Of course, you know that I hate to talk about it because those trading guards, lowercase t, lowercase g, are right there. They're listening. They heard me. And they're going to smack me on the nose if I pat myself on the back, which I won't do. I won't do it. You're looking at, so that's Goldman Sachs, used to be the leader, certainly came back powerfully into a couple of weeks ago, and now it's not acting very well. But the MACD in the weekly chart has not yet crossed negative. It's turned down, but hasn't crossed negative. And the slow stochastic at 83.81 says, hey, I've still got strength. Don't put me down yet. And the monthly chart doesn't even recognize yet that there's been a pullback, so we're going to have to wait on that. But Goldman Sachs, I'll give you the levels. A close under 176. Yep, a close under 176 on any daily basis really impacts the weekly very negatively. And a close above 182, that's at 179.71. 3 points should not be a big deal for Goldman Sachs. So a close above 182.60 would say, I've got room to go a little higher, and then we've got to be real careful. Next question was, Sarah wanted to know, Morgan Stanley and the wave count, etc. So that's exactly what I'm doing. Morgan Stanley MS is trading at 33.24, having made a peak F top. That wasn't the 19th, was it? On the 18th at 36.25, 36.25, type it in, 36.25. Now, this is going to be really interesting. It's only a 10%, 11% correction that it's had so far. It's trading at 33.24, up 39 cents. It's trying to make, the stochastic and MACD are trying to flatten out, but it too says exactly the same thing, that the weekly 33.85 level Oh, it's just so close. 33.69 is the daily 9 period. 33.85 is the weekly, and 32.25 is the monthly. And there's confluence coming in with the MACD and with the 200 period exponential moving average and the 9 period exponential moving average either cross, deflect lower. This is going to be really important right in this area of 32.60. So all of that's suggesting that Morgan Stanley at this particular point, let me just open these up. It's really important. I do this work because I know the charts quite well. Then I forget people. See that cup formation? It's called the Chapman wave cup and ladle, and it breaks out powerfully. It doesn't stall. This is not really, I suppose you can call it a cup and handle. For me, it's more important that there was a power move that took it right to E, pulls back, goes underneath the left side lip of 33.52. That says a close in Morgan Stanley below 32 says, and a quick test of the 31.12 low of the 8th of August. Remember, 8th of August is where many stocks really started their big move up. And if that happens, that's very negative. I just think there's room to the upside a little bit here in the XLF and these financials. And the question really, Sarah, should be, would I play it? And the answer is that right here, I take a little nibble on the upside only because of a percentage trade. But if you had to ask me, would I do it as a buy and hold? I would just start off with a small position, and if it starts to increase and it gets through the end of by Wednesday of next week, between Wednesday and Friday of next week, if the XLF, just make it real simple, if the XLF, let me just type it in here, XLF, if the XLF has not closed under 22, but instead it's trading above 22.80, 22.92, actually trading in the 23s, I would say that the trading position that you'd start, let me do this all over again. I would nibble right here at 22.58 because I think you've got yourself 40 cents. 2% on a small position is not a big deal of risk. But it's only a trade. It's a trade because the market's been beaten down. It is time for a bounce. So that treated like a bounce. And if the bounce turns into something more, you're in the position. Where would I add? That would be really tough. But I think I would add a trading position based on the 120-minute chart of the XLF if between 3:15 this afternoon, 45 minutes before the close, and 10:10, 45 minutes after the open, roundabout, tomorrow, if the XLF is holding really well and hasn't slipped back under 22.40, it's at 22.59 right now, I say, you know what? If it takes out whatever the high of today is by 1 penny, I would add another position and call it a trading position, and that one I'd have a much tighter stop, maybe a 25-cent stop. That's a 1% stop, 1.1% stop. Why? Because if you have the opportunity for a trade of going from 22.62, let's say, to 22.80 or 22.92 on a percentage basis, 4%, 5%, hey, that's very nice. Especially if you're limiting your risk, and especially if you know that the downside has just been hammered, and that there is time for a rally phase. The position that we got into this morning is up almost a point from where we entered. It was a 20. I don't want to speak out of turn. I think it's actually up more. 2062 trading now. Yeah, we were in it at 20. Let me just check this out. We're in at 28.62 using a 40-cent stop, which hasn't been hit. And it's trading now, this vehicle is trading at, so let me just double check. Yeah, it's up very nicely, and I can't find it right now, but it's there somewhere. I'll tell you right now, it's trading, we bought it at 20, what did I say it was? 28.62, and it's trading at 30.31. So it's up, nice, not 2 points, but up 1 3/4 points. And as long as the market moves and it's up 6% from the low of yesterday, we aren't up 6%, but it's up 6%. So that says, actually, no, we are. Yeah, we're up very nicely as well. So I'm suspecting that this particular instrument, at least for us, the way we're using our portfolio, is a really nice compromise to buying other things. And that's the way I'm going to have to deal with it. So let me go back to our story here, talking about the XLF. XLF is now moving high. It's at 2261. And this 120-minute chart, it really says that there should be a rally. And that rally, I'll draw it in here, should take the form of, I don't think it's going to be a V-shaped pattern, but I'll start off with the V because it made a straight line move down. Straight line meaning since all support levels were made in such a way that the lows you can draw a straight line based on the lows of the actual bar itself, not using wicks or anything, just the entire, whatever it is, the lows match very nicely right there. Let me open it up so you know what I'm talking about. If you're looking at Tiger TV, right there, it matches nicely. And now on the way up, it should match, and the XLF should have support at 2252 on the 120-minute chart, but there's a real good chance that it's going to go to 2265 very soon. So that's the way I'm looking at it. So I hope, Sarah, that answers your question. Trading, yeah, as a short-term, I wouldn't even call it a swing trade because it would have to go all the way. And XLF, for instance, would have to go all the way to 23, 40-something, 42 to have this as a swing trade. No. It would have to go to 23, 25 if you want to call that. It's not really, but if you want to call it the next peak of significance that was made on the 8th of October. All right, enough of that. Now let's go to the VIX index. We are not in the VIX index. We had been. We made some very nice money. Didn't make anything close to what I anticipated, which I still anticipate over a period of time. But there is a huge leg E that is, just look at these charts. Let's get rid of this 120. Peak F in the 120-minute chart. Almost certainly a peak E in the daily. Leg C in the weekly, having gone way, way, way above the 2140s, 2150s previous highs. It went to 2464 and it's trading now 2464. It's trading now. The volatility index is trading up, not a 5, but a 4. Edit. 4. They made this at Trade Station. It's very nice. Good. Trading at 2166, down 2.98, down 12%. But this is going to be very important. On Friday, if the VIX hasn't closed under 18, now could intra-week go underneath, but it hasn't closed under 1820, but instead is above 1820, and then the following week, it doesn't close under 1820, but in fact closes above 1860 or 1880, higher highs, higher lows, and is trying to test the 2164 level where it is right now. That's going to be very bullish for the VIX index, very bearish for the stock market. My thinking right now is that we've got a consolidation going to take place between 19.26 and 18.04. And there could even be one sudden slide to the 1685 area. And then we're going to see, does strength return, or is this now done for a period of time, maybe 2 weeks or more in the VIX before it actually gets activated again? It just goes back to sleep. It just says, you know what? Hey, nice being outside there, folks. Nice to see everybody. I just can't take it. I need to get a sleep. A little koala bear from Australia. So this is what we're looking at, the VIX index pulling back. Now, this is going to be very important. What are the transportation indices doing? The transportation index is trading at 142.67, up 4.60, up 3.30. My thinking this morning was that I wanted to go long one of the airlines. They've got the benefit of much, much, much lower crude oil prices. I mean, just look at this oil price. The USO has plunged from the 39.44 area to 31s. The 31s, that's 8 points. That's 20. That's 25, 24%, something like that. That is huge. So crude oil could have a little bit of a bounce, but the IYT. Wow, a break coming up. The IYT, which is the iShares Transportation Index, could very well run from 142.60 and the low that was just made at 137.85 to 144 to 146 area. Quite quickly. Basil Chapman, Tiger Conditions. I'll be right back.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. Just a final few moments before you go to the options show with Chad, and this is the ideal time to be looking at that. Let me just show you something here. I had a question during the break. Bob asks, SPX, is this October expiration week with 30-day closing low yesterday like 07? Would you compare where market is in 14 now with other market tops like 07, 00, or even October 87. I don't see any connection whatsoever to 1987 in the chart pattern that I'm following, the way I'm following it. Now, I know Larry's done some work on it, and I know what he's looking at, but the actual pattern that I'm following is a little bit different. And what I'm looking at here is, let's skip the daily. We'll go to the weekly chart of the S&P. I'll do it for now. I was going to pull up the comparisons. It really doesn't matter. I did a lot of work over last weekend. In fact, over the last couple of weeks, looking at my very long-term Dow chart, monthly chart. I even overlapped them. It's just very different in chart formation. And that's the reason why when I'm asked and people say, if this is F in the New York Stock Exchange Index, or if it is in the daily, in the S&P recycled to a D, but the INDU, the Dow is in peak E with a doji top, and I've said that I think that this is going to be more. Look, we've already hit, when Z called me the other day, when John called me the other day, 4 weeks ago, and asked me about where would my target be on the S&P. I had circled this area. That's kind of where we are. Yet the MACD and stochastic are still very poor. So I'm suspecting that we've got a counter-trend balance going on, and then we're going to come back. And if the test in the Dow takes out decisively the 16,100 to 16,000 support area, then you're looking at 15,600 to 15,340 as a potential. I say potential because I don't have any indication from the monthly chart yet, although it's halfway through the month. And if I really want to put pedal to the metal here, I would be saying, hey, it's under the 9 EMA. There's no way that in the month of October it's going to go above 2019.26 in the S&P. Why don't you just man up and call it as you see it? Well, the way I see it is I really need to be careful about getting too bearish, because if there's a rotational correction, you've already seen that some sectors and some stocks have been smashed to the downside, while others, like the IBB sector, the NASDAQ sector, and even some of the NASDAQ stocks are only now just turning down. I showed you Google, I showed you Netflix. But at the same time, I have to be aware that the weekly chart is saying that there probably won't be support until this candle, the candle of the 16th, the week of the 16th of May, between 1902 and 1862, is tested. And the week before, the little tiny doji from 1859. So that whole 1860 to 1850s area is going to be absolutely imperative to monitor over the next 5 to 10 sessions, right? Going towards the end of October. It doesn't have to be the end of October, but end of next week. So that's number one. Number two is how long and how far and how strong would any bounce be? Well, the way it looks right now, I don't think the bounce can get much more than from 1896 to the 1918, maybe 1922 area in the S&P, but the 9-period moving average is up at 1951. If we use time to rally and then start to fail, we're looking at this correction being much longer in time and price, or at least in time, because it'll have to come back to retest the low that was made yesterday or today at 1874.14. So that's the S&P. But I'm going to make it real simple. And I'm going to leave you with this, and I'm sure you're going to have some great stand-ins for me. I'm going to do my best. I don't know if I can to do the show live, but I will definitely every day do as much as I can. I will do my opening call. So this is what you got to watch: the VIX index. The VIX plunges under 18 to 17 support. This market goes higher. The VIX hangs out here in the 20s or the high 19s. Hey, it's just a limited upside. Hey, folks, have a fantastic time.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.